होता है कि आपको उसका नेचर नहीं पता लग रहा है, then you can tell me. First, if you have any account, you can ask, then we will move further. Okay, income tax. Very good. Income tax. Okay, fine. Any other account? Okay, I will explain income tax. See, first thing is that you should be clear about the meaning of income tax. Okay. CGST, SGST. So you can say input CGST or input SGST, then output CGST, output SGST. If you will do practice, you will certainly find. Okay, very good, very good. Now the responses started coming. Then one more is there, that IGST. So input, or I can adjust IGST here only. Why to this? And that same output, yes. Now one more account is there, bad debts, and one account is provision for bad debts. Provision for bad debts. Okay. So we will discuss them one by one. See, we are investing our time on this topic only because of the purpose that this will help you in making journal entries also, because you are clear about the nature of these accounts. You will be able to apply the rules of journalizing easily, first thing. Then if you are able to make proper journal entries, obviously you will be able to make adjustments correctly in the financial statements, because these adjustments are also nothing. These are also journal entries. Second thing, then if you know how to make journal entry, you can easily do cash book or that ledger account. That all you can do very easily. Basic is journal entry. So that's why I'm investing so much time, because it is important for each and every part of the accounts. Now, first thing is, what is the meaning of income tax? You have to listen it very carefully and try to tell me the meaning of income tax. It is a tax levied on the income by government. Government asks that whatever income you are earning beyond a certain limit, you are supposed to pay tax on that income to the government. In one way, what government is doing, if suppose you are in 20% tax rate slab, levied means sort of imposed or charged. But the word which we used in the reference of taxes is levied. So in one way, you can simply understand it that one part of your income is demanded by government of India, that you, whatever, suppose you are earning 100 rupees and you are in 20% tax rate slab, So you are supposed to pay about 20 rupees to the government of India out of your rupees 100 earning. Rest 80 you can spend for your own purposes according to your wishes. But 20 rupees will be going to government of India. If you are in 10% slab, then 10 rupees will be going to government of India. So that will depend upon the level of income. That is not your matter. But one nature which we can easily identify is that will we get this tax back from the government of India? Whatever income tax I am paying, will I be getting back it from government of India? Will government of India return me that money which I am paying as tax to the government? No, obviously. When I am paying tax to the government will use that money for its own purposes. Government will not refund that money to you. You will not get money back. So then it is your expense or not? In one way, it is your expense. Fine. Clear? Everything is clear? थोड़ा सा broad concept है and I have to explain it in different manners. So please listen it very carefully. Otherwise you may get confused. So income tax practically is an expense for you because ultimately it is going from your pocket to the government of India and you will not get it back. Now, second question is who is liable to pay tax? Who is liable to pay tax means we are having different forms of business organization. One is proprietorship. Then second is partnership. Then third is company. The three main forms of business organization are proprietorship, partnership, and company. Now, for a company, income tax will be an expense because company will be the SSC. SSC means the person who is liable to pay tax. The liability of paying tax is on the company. Why on the company? Because company is a separate legal entity. Whatever business activity is going on, that is on the name of company. So company has to pay the tax. In case of partnership, the tax will be charged on the income of partnership firm. The partnership firm, which are whatever income they are earning, they are bound to pay some tax on that. So obviously for partnership firm also, income tax will be a expense. For partnership firm also, income tax will be an expense. But for proprietorship is nothing more than an individual. Proprietorship is not separate from its proprietor. So the whole profit is going actually to the proprietor. So that income which business is earning, even that income is treated as the income of the proprietor. So that's why here the proprietorship firm is not the SSC. So that's why the business is not liable to pay tax. But the proprietor is liable to pay the tax. Proprietor is liable to pay the tax. So in case of proprietorship, there is no liability of business, but there is a liability of proprietor. First thing. In case of partnership firm is liable to pay income tax, but after that, partners are also liable to pay income tax individually on their incomes. Then in case of company is liable to pay income tax to the government of India, and the persons who are shareholders in that company, they are personally liable to pay income tax on their other incomes, whatever income they are getting. So as regarding proprietorship, because business is not liable to pay tax. That's why income tax will be liability of proprietor, not the firm. And that's why we treat income tax as drawings. We treat income tax paid by the proprietor as drawings of the proprietor, first thing. And that's why because in this current year in 11th class, you are having sole proprietorship in your syllabus, partnership and company is not in your syllabus. That's why in this personal account, in this we will be treating it as personal account. However, However, income tax is your expense as if you are in partnership firm or if you are in if you are a shareholder of company. If you are a company, then income tax paid will be a expense for you. It will be a nominal account then, and then it will be written in profit and loss account. So both way it should be clear to you. It will depend upon the circumstances of what nature it will be. Now I will give you one more example. Suppose in case of partnership firm is paying income tax. That income tax will be the expense of the partnership firm. Am I correct? So then that income tax will be nominal account. But suppose there are three partners. Now listen to the question carefully. A, B, and C. Now suppose A has also income and A is also liable to pay some tax. Suppose A is liable to pay tax of rupees 30 to the government of India. That 30 he has not paid from his own pocket. That 30 rupees he has paid from the partnership business money. So that's why that 30 rupees will become drawings of A or not. If the partner A is paying his personal income tax from the money of by using the money of partnership firm, rupees 30. So that 30 rupees income tax will become drawings. So one income tax will become nominal account, the tax which is levied on the partnership firm, and the tax which is levied on A. However, it has been paid by the partnership firm. That's why it will become drawings of A. So there are two types of income taxes in case of partnership firm. I hope you are not getting confused. Now it's clear when it will be a personal account and when it will be a nominal account. So that I have explained you for more knowledge purpose. But right now you are concerned it with only for proprietorship firm accounts. That's why remember it that it will be a personal account. That's why I'm saying that you don't extend this concept to the partnership firm or company. It may confuse you. But because you asked, that's why I answered. But right now you can be uh, understanding only for the purpose of sole proprietorship accounts. So in that case, it will be a personal account. Okay, now coming to input CGST, input SGST. When I taught you GST, I clearly told, if you remember, that GST paid is recorded in input or output. Whatever GST you are paying at the time of purchase, it will be input GST or output GST. Try to recall. If I am purchasing goods or if I am purchasing assets, then the GST paid will be input or output. Yes, very good, very good. It will be input GST. It will be input GST. So at that time, I told that it is not an expense for you. Whatever GST you are paying, it is not an expense for you. Why it is not an expense for you? Because you are paying GST, same you will be collecting GST also. And whatever GST you have collected from that GST, you will get the advantage of GST which you have paid. So that's why you will get it back from the government of India in one way, whatever GST you have paid. So that's why it is not an expense, but it will give you some benefit in future to adjust this amount from the output GST. So that's why it is an asset for you. It is a real account. Or you can say it can be a personal account also, because input GST will be representing the government of India, that I have to collect this money back from government of India. Input and output, these accounts are representing actually dealing with government of India. So output GST is your liability, because you have collected that money from the customer on the behalf of government of India. That money belongs to government of India. That's why output GST will also be a personal account. Output GST will also be a personal account. So both accounts will go to the category of personal account, you can say, because the both accounts are representing uh, government of India account. Both accounts are representing government of India account and dealing with government of India. That's why you can put both of them in personal account category. One is your asset and one is your liability. No, both cannot be real. Both cannot be real, because one is liability and one is asset. Input is your asset, because you will be getting this money back from government of India. But so it means, right, that whatever money I have paid to the government of India as GST, that will become that I have to take back from the government of India. That's why I have opened an account representing government of India named as input GST. No, input GST, better answer will be personal account. Better answer will be personal account. Because I have to collect this money back also from the government of India. Yes, these both are clear. Input GST and output GST. So input GST is not an expense for you, and output GST is not a income for you. That's why these accounts cannot be nominal account. Now next account is bad debts. So bad debts are your losses. That's why it will be a nominal